Hey everyone, it is Sunday, I believe the 14th, back at my desk going through, 15th, back at my desk going through some of the requests that you guys submitted. Again, there was no session this Sunday because of me traveling to Las Vegas. Thanks for those of you who were there. There was a FinTwist conference. It was pretty fun. Anyway, so let's hit the list. It's not as long as usual. 75, I believe, tickers. So Apple, and this is a 30-minute chart. Basically, the idea there is that we fell apart from a level, and now we're going to struggle to take that back. So Friday was super strong. Hopefully, people used it to fix broken trades, not chase new ones. If I did chase new ones, I should have booked profits pretty quickly because we're not guaranteed anything. This week we're going into a monthly expiration week, and Wall Street of late fears it. So let's see if Monday we will have follow through. This is a bullish setup based on technical short term. This is a 30-minute chart. So maybe it gets to this box, and this box is going to be difficult. So expect sellers there. If you take this out, which is 157-ish, you might get to 164. But if I was long and hurting and this helps me, I would be tempted to exit that position. Airbnb, similar concept, only to a bigger degree. So this is not the same fundamentals as Apple, so it has that challenge going against it as well. This should have held, and it didn't. The good news is that it kind of hit the target that I had for it, but I can't tell you this is a bottom. However, if I'm long, it's probably too late to panic out, so I'd sit in it for a little bit. Now, technically, it could recover back to 130, 135, even 150, but you have to acknowledge the fact that this was very important to hold, and they didn't. So who's to say it's going to be easy? If the markets rally, the job will be a lot easier, but for now, I would expect sellers at 135. If I'm long, I wouldn't get out. If I'm looking to get long, I will take a starter position in it. I wouldn't go all in. It will need the market to rally, and you can see how since April, the sellers are in charge. So I shouldn't assume that the buyers are going to take charge that quickly. If you look at it, 137, 130, plus or minus $2, it's going to be a problem. Let's go with Adobe. Good company, fell on hard times. If I take all the lines out, technically it's probably I'm going to say this often, probably too late to get out. But it also is risky because, so this is I believe the pandemic before COVID, the pandemic bottom, COVID, and now they just closed the gap. Maybe they overshoot a little bit, but it's definitely not a place to start shorting. Not a place to panic out, but to be cautious. I don't pile in, I don't add. If I'm looking to nibble long, that would be the assumption that the markets are going to rally from here or not be in the hands of the bears. You can see lower highs, lower lows, and you can see several lines where they failed before. Where 424 and 441. So if I'm looking to get long, and check this out. So first problem is 410, and then you have a problem at 424, and then whatever is up here, 440. Be realistic. So if I'm not long already, I want to see how they handle this one. Maybe they come back. If it falls back to 390, thereabouts, I'd be tempted to get long. This is a pretty good floor. This is a problem, this is a problem. So you're going to ping pong between these two until one side takes the cake here. Again, so from a trading perspective, I don't want to chase it into it, but if I'm fast enough and it breaks out from 410, maybe I can get $10 out of it. Little gap here. So tactically, yes, it's tradable, but you should be fast. This is a 2-hour chart. Let's see 10 minutes. Do we have more clues? So yeah, like I said, I would rather buy the dip. If it gets to 390, that's fine. There's a gap here. So if Monday it loses 401, maybe it dips down to 395. I'd be interested for a swing trade, because if the bulls are going to take over, they're going to do it a little bit at a time. So this is an improvement, higher low, higher low. If it dips higher low and it comes back and takes this out, then it goes up here. This is, I believe, Adidas, so kind of like trading Nike. The bears are in charge. They're having rallies, they're selling them. Rally, sold, rally, sold, rally, sold, rally. So don't expect a change in the behavior until you see evidence of it. How do you see evidence of it? Don't go below 90 or 89. That's what they do. They come down, they do a rally, they come back to where the base, and then they lose it. They make a lower low. Same here. So if they go below 90 or 89, assume that whatever's going on is going to continue to go on. I don't like the fact that they lost this so easily, but they came back above it. So let me see on the daily. Yeah, this is a weekly. All right, so this is a good base. This is a pandemic level. What the heck is that? So this is a pandemic level. From here to 80 is a good base. So if somebody's looking to start a position, unless there's something wrong with Adidas fundamentally, it's okay. It's too late to panic, I think. AES, what is this? I don't know what that is. So let's zoom out. Last time they were here, they made a good rally. Now they're back to here. Can they do the same thing? I don't know. Let's zoom out 1 second. So when I zoom out to a weekly chart, I get a better picture of what's going on. This is pretty scary. They needed to hold this one firmly, but I give them credit that the week was kind of violent, so they rejected that. But you want to keep an eye on it. It could easily come down to 18 or the 17 zone here. But one can assume that this is a better starting point than an exit point, although this is a weekly chart. So in 2020, pre-COVID, now it's back to it. Be careful with that though. Affirm, what am I going to say? It's a beatdown. So the market will have to, okay, so they had a bounce off of earnings. I guess that's good, but look what happened to every bounce before that. This has never been lower, so there's no support to speak of except the last bounce level. So 14, if you lose it, you're going to come down another notch. At some point, the market is going to stop beating up on it. So they hate high growth, high spend companies, and this is what this is. So management needs to come out and say, we're done spending, or we're worried about spending or something. Meanwhile, it is a decent business. So look at the volume. That's a good statement. This was a drop on volume. This was a bounce on volume. Maybe they're done. So if I'm long, I stay long. If I just took longs, I'm not that crazy to give it one more shot. Now, when they get towards 30, 32, they're going to find sellers. What will they do there? That's the thing. What will they do there? Whoops, what just happened here? Okay, so stuck in a hideous selling. They're trying to go sideways. That's how you swim out of a descending channel. But they created another little channel here, so it could go either way, the discussion, so be careful with that. Zooming in on it, that's a 30-minute chart. You can see the cluster they're dealing with. I don't like it when they gap up and they have a big problem. So now they're going to ping pong here. Maybe they filled the gap. So here's my strategy. If it comes back to here, which is about 19, let me know so I can maybe take a long, because maybe then they're working on an ascending channel. So I will put a question mark there. So buy the dip, we'll see. And then this should bring some buyers to here. This is going to be difficult. AMD, what's to say about this company? Fundamentally, it's pretty darn good. However, it is technically broken. I've shared that idea with you many times, so I'm trying to take out all these short-term lines that I had for it, which all came through. So now we have an opportunity to recover a neckline. So I believe that AMD is technically broken until it gets back above 100 convincingly and stays there. So I think they need to overshoot to 104 and stay there so they can come back down to 100. Your biggest problem is 99.8. So let's see how they handle that. Let me show you what's at work. Take out all these lines. Giant head and shoulders right there. You see it? So this should target 60s. I know many of you didn't believe it, but it came pretty close. So they need to recover this zone. You see it now? It's kind of like Bitcoin. They're stuck in a vortex. The bulls need to step up, and they have a big wall above them. So in this case, I think 104 needs to be there. And before that, I would not chase it. This is the opportunity now, because there is a neckline and the bulls are on their heels. The Amazon, technically it gives you whiplash. It moves so much, it has a lot of support, but the support is so widespread that you cannot count on it being a hard line in the sand. So what do I do with it? I don't do anything drastic. It's a great company long term. Does it have a split coming? I'm not sure. So if it does, be careful with playing options, because if you take a good sized position, you end up with a whole bunch of contracts. So just be careful with that. Now technically, you have a problem up here, which is 2,500 give or take. And I say give or take because it moves in hundreds at a time. And then you have a must hold level, which is not give or take, 2050. You lose 2050, you're going another stint lower. And it'd be in the 1000s pretty quickly, because it's right there. And then what? It's been so long that you're going to have to zoom out. Okay, let's go to a weekly. All right, so this is the pandemic and Amazon. So here's my dilemma. So companies like Amazon, Facebook, Netflix, PayPal, CRM, those are just a handful I remember off the top of my head. They're already inside the pandemic. Whereas Apple is like 30% still above. It can still fall 30, 40% to get there. Google, same. So these guys have shed all their froth. All the fat is gone out for one reason or another. So now either the whole market catches up to them and we still have more pain this week and these guys relatively will be better, or these guys will fall another 5% or something. So if Amazon drops into another 10%, I would be all over it. Here I could start, but the assumption would be that the markets are going to be fine. So that assumption is pretty important for Amazon. So if you lose 2042, you're going probably going to get the 1000s, not to 1000, below 2000 is what I'm saying, clearly. So I'll be interested down here. I'm going to put a nondescript alert there just to look at it. Meanwhile, into 2500, big problem. Gap up to 2700. Now there, expect sellers. That's what I will say. Because that would be the place from which they fell apart, and people who are stuck, they will decide that, hey, maybe I want to get out here. So let's see. Right here, there should be sellers. So they will follow markets, but they will definitely struggle with the sellers that are lurking. APA, who is this? Arapaho? I don't know. I don't remember what this is. Okay. Nothing to be done. It's right in the middle of the range. On the daily chart, you have sellers above, buyers below. It's pretty simple. If I go to 30 minutes, probably the same message. Yep. So it could fade to 39.50 and it could rally to 43.50. You find either way you're going to have a gap you're going to fill. So ping pong between the two. Buy the dip into the gap and get out above into 44. Well, you can learn a lesson from Twitter on this one. This one has a buyout price in the 90s, yet here it is trading here. So Twitter had the same scenario. They had a buyout above the current price at 50 whatever 4, and then the buyout offer kind of died when Elon changed his mind, kind of. So same here. It's a binary bet. If you bet up that the deal was going to go through, you're going to make money quickly. If you bet that the deal is going to die, then you're going to fill the gap, or at least down to 70 pretty quickly. So it is a binary bet. You do not have knowledge unless you're part of the deal. Now, Boeing suffers the fate of airlines, and it is back into the pandemic lows. I remember because we traded it a lot from 90 when Trump said we will help Boeing, and then to 120, and then ping pong 120, 110, 120, 110. So I would be long down here. The company's okay. It's not that old Boeing. It depends on the airlines. And I flew this weekend. I can tell you the airlines don't know what the hell they're doing. So credit put spread. You can convince me buying calls, maybe strategically how. If I see a breakout, I would. So in this case, 131 might get me interested to get to here. And if you get to above 139, 140, you might get another leg higher. A lot of sellers above. So technically, tactically, this breakout could get you somewhere here. This breakout gets you somewhere here. Now losing this might get you closer to 110, in which case I'll pounce, because I remember trading the hell out of it into 110s, made good money. So I will repeat. From here, if you convince me that I need to trade it, I will probably sell a credit put spread and maybe not defend it. Maybe I'll take shares if it gets under pressure. Baba. Okay, so I spoke to a couple of you that are long Baba and stuck around 85, so that's not a bad deal. It's on its own, fundamentals are phenomenal, but it has some political problems in China and operational problems. Now, it might pop tomorrow or this week, because I believe I read a headline somewhere on Twitter that they're reopening China or starting to reopen. So that can only be positive. There's an inverse head and shoulders. Eyeball, it's going to be about $7 to $9. So above, say, 89. So somewhere here is doable. This red line up there is kind of a high node of volume. So once they hit the 100, there's going to be sellers there. But in the long run, I wouldn't short it, because it's been beaten down so much that it can be 220 in no time. But it's a high gamble. So, but it is one I would take. If I were to bet on an equity from China, this would be it. This would be it. This would be it. Fundamentally, it's not broken. I don't know what this is. Berkshire Gray. It's definitely not Berkshire Hathaway. Anyway, oh, Nick, you're so funny. This stock is broken. You're going to have to do homework. On a 30-minute chart, you're in the middle of the range. So you have support below and resistance above. You're going to have to do homework to see. I would not add to it, whatever this is. So Bill.com is fell apart on earnings. I don't remember what kind of earnings they delivered, but the fact is they went into the 100 mark, which is a round number, which is also the breakout line from the summer of the COVID. This was a mark, a mental mark. So look at it, huge head and shoulders above, kind of like AMD situation. So between this one or AMD, I would prefer AMD. Technically, they look the same. These guys have to get up over 140, 160 in order to retake the reins from the bears on the longer term. Now on the shorter term, on the 30-minute chart, maybe, just maybe, they're taking the reins back over from the bears. So we'll see if it holds 110. There's a gap here. So if I wanted to get long, so listen to this carefully, if I wanted to get long this company, fundamentally, I remember they grow fast, but they also spend fast. So it's part of this stupid sell these kind of companies like Affirm and all of that. If they come back to here, I would be tempted, but you should stop out immediately below the lower low. That's it, because then the bears are still in charge. They're selling rally. So if it comes down to here, maybe get long one last time, long one last try, and stop out. I guess I would go 40, trying to make it more aggressive. So I want it to be how about here? Yeah, this will give me eyeballs on it. It's going to be difficult to fill this gap, but it's available. So this is a pretty decent trade setup. Tactical, again, tactical, if you forgot or you don't know, is totally technical, not married to it, not adding to it. You get in, you get your run, fine. You don't, you get out with a little loss. So Beto, that is the Bitcoin thing. You know my story with Bitcoin. Beto is not the right chart to track. So look at Bitcoin and follow my lead on it. Bitcoin just fell to my target number 2 that I told you about in November. So it's not like people are saying, oh my gosh, what's happening to Bitcoin? We said what's going to happen to Bitcoin in November. Tick by tick, it all came true. So we're not blindsided by this. When everybody's freaking out, we're saying, hey, we knew this was coming months ago. So if you missed it or if you're new to the program, Bitcoin lost the footing, consolidated, lost footing, and now it needs to recover that footing, or it's going to consolidate and lose one more footing. Because you can't see here, but below here is the Bitcoin breakout at 19. Remember that number? 2018, it soared to that number and then crashed. Everybody made fun of it. It went down to like 2,900. And then it came back to 19 and it went to 70 or 65. Well, it never came back to 1920. So over the trip, when I saw it at 25, at least on one of the chains. So that was my second target. The third target would be the very low 20s, if not the teens. So this is, if somebody wants to nibble Beto here, that's fine. It's part of my strategy. Nibble a little bit at 33, nibble a little bit at 25, and get a better position down in the low 20s. And leave some dry powder in case it goes to single digits, which is possible. But eventually, I want to ride it all the way back up to however. This is a crypto trade. So if you're a crypto trader, this is for you. If not, just leave it alone. Nobody needs to trade crypto if they don't want to. I'm enjoying crypto. It's something new. I know it's going to be the future. I mean, digital money is going to be there. So what do I do technically? If it loses this, I let it go. I'll pick it up lower. It's okay to nibble here. Okay, BKR. What is this? Baker Hughes. I'm not a fan of all these companies. This is oil exploration or gas, right? Anyway, technically this is tough. It could fall to 32.60 and fill this gap. So not my favorite. Whoops. On the short term. On the daily, also not my favorite. Once they lost 36, I think they have sellers lurking up here. So yes, they have higher lows, but they're going to struggle with this. If they take that out, then they go. I would bet against it. So if I were as a trader, I would short the pops to here very responsibly via puts, not via short sell, maybe a credit call spread, or I would simply buy a put betting on the shorter term setup on this red and blue thing, which suggests that it could drop to 32-ish, maybe fill this gap. So at this point, I think it's more bearish than bullish. BSX. The bears are in charge short term. They're selling rallies. You can see it. So first things first, the bulls cannot lose 38. You lose 38, you're going to have a step lower. You take this out, you're going to probably get to 41, where there's going to be a lot of sellers. Look, sold. I mean, rallied, sold. Rally. Now they're going to deal. Fill the gap and then sell off, and definitely hold this. So short term, you've got your plan. Hold 38, try to get to 41, fade a little bit. Don't get to lower than 38.8. So you can start building an ascending trend longer than this one. That's the deal there. Some of these stickers are stumping me. I don't remember this one. Let me see, do I have lines? That would be terrible if I don't remember drawing lines. Okay, 42 is where the bulls took over. The bears, sorry. So until they get above that, the bulls are on their heels. Kind of like Bitcoin, look. Bear and AMD, bearish pattern up here, you can see it. They lost it, now they can't recover, they can't even come close. However, they are fighting to hold the leg. So if you lose this, you're going to come back down to 31, 30, and you start ping-ponging down here. Or you're going to have to struggle to take these losses out. This is a daily chart, I don't need to get fancier than this. So the bulls need a miracle to pop above 42. Charter Communications. What is going on with this company? Okay, so this is a weekly chart. Pandemic lows, we're in there. So I don't know the fundamentals of it. They look pretty stable. It looks like it's making money. Let me see, do they bleed or make cash? They make cash. So I'm not sure what's happening. So study the company to find out. It does 16 PE, 1.5 times sales. I'm not sure what they even do. So just be careful that the fundamentals are not has-beens. Meanwhile, let's zoom in a little bit and see if we can come up with some sort of a strategy short term. Okay, 480 is a catalyst. It's a problem, but it's a catalyst. What does that say? Okay, so I said shorted up here, so that worked, I think. Anyway, you can read it later. This is a problem. Take that out, you get to here. This is support until it's lost, then they come back to here. So now you have a box. We can draw a new box. Ping pong inside the box and chase the edges of that box. This will get you to 510. I'll put an arrow right there. So if you take this out, maybe you get to here. Ooh, that's a big arrow. How about we make it less emphatic so I don't give somebody false impression as to how exuberant I am about it. How about that? Okay. We'll put an arrow lower. Okay, so this is the tricky part. So if it gets to here and it loses that, it's going lower. So I'm gonna put a warning down here. If you fall here, you must bounce off. And I would catch the falling knife if it does that with a tight stop. If you lose this, unknown. But if they fall to here, I would catch a falling knife with a very tight stop. Otherwise, I would chase the breakout from here. That's a pretty good trading plan for this guy. So every time I get a request for CL, I don't know if they're doing crude futures or they want Colgate. So let's go with crude futures. Oil is going into a prior fail. I wouldn't get long oil up here. You know my view on oil. I think they're feeding us a bullshit story. But hey, you can't short it with conviction. Now Colgate, you have an opportunity here. One more green tick and maybe you get up to here to recover some of that gap. My experience is gaps that big are not easy. So be realistic. And if you do catch it, know that there's going to be sellers from here on up. So I'm going to put that. I think there's going to be resistance starting here. So it's not every gap fills right away, all of it. And it's hard to start. So I'm going to put there the line here to start it. It is there, no denying. If the markets are up, hey, this should be a done deal. Now you need to hold the support down here. So I see support and it should have support down there. Okay, so this would be for Colgate. The next one, Comcast. I don't know what's going on with Comcast. I really would avoid it, given that I don't know what's going on. So I said stuck up here. Well, guess what? It's no longer stuck up there. Now it's stuck down here. So trade the box. That's a big ledge. A lot of sellers up here. And it better hold this, otherwise it comes down here. So I really don't know what's going on here. What is this anymore? AT&T, not AT&T? I have no idea. Is it AW, whatever that company now they created? Anyway, so do your homework. Technically, it's stuck in a new box. This box didn't work out so well for it. Maybe this one will. If not, just expect the same outcome. The CME, not sure why it's falling out of bed. Aren't everybody trading what they provide? So this would be a good starting point for me. Interesting. I don't know their fundamentals very well. They look pretty profitable. Do they make money? Like actually make money? Yeah, 2.5 billion in operating. What is this financing deal for 70 billion? What the hell is that? So, did they buy somebody? So look into that part. So let's trade the technicals. Technically speaking, on the daily chart, it could recover back to 216, but there's so much in between, right? So if you force me to be long or short this company, I would be long with a stop. The stop would be dollar. If it breaks out of 202, what is dollar? I would base it on dollar amount. If I lose X percent or X amount of money, I am out. That's kind of a stop. Otherwise, this could do one of these. Or one of these. So if it dips to here, so maybe I should move this one. I feel like Bob Ross moment right here. Put a little tree over here. What I would do, definitely stop out of here because I don't know what's happening if it loses that. Again, fundamentally, if you're long or looking to buy it for fundamentals, make sure you know what that financing thing that was big time. So I do like this one. I'm going to make a note of it for myself. In fact, I do that. So I discussed Costco live with those of you who were at the conference. Whoops. The company is great. The stock price action of late is not so great. So this is a 30-minute chart. So it's relatively short term and looks like once it lost the ledge up at whatever 580, now the bears are in control. So they rally, they fail at resistance, and then they create another low. So now it's critical that they get back inside this box. Otherwise they risk losing this 480. So you want to hold this. So let me go back to a daily to see in relation to the pandemic zone. So the pandemic completely whacked out Costco. So you can see how much it can lose. Remember I said Amazon is inside the pandemic? This is still summer of 2021. So it has a lot to go to pre-COVID levels, which were, where is COVID? Down here. Good Lord. Yes, so I did draw this to freak people out, and it's worth freaking people out. Fundamentally, you can't imagine how it could come down here because it's such a solid company. Don't ask how. I've seen it happen. Just trade the lines that are in front of us, not the emotions. This is a massive head and shoulders in the making. If you draw this, that's a big statement. If you draw this, you lose this, you become like AMD. You're going to drip lower. Maybe one big whoosh, maybe one at a time. But technically, I would be selling rallies into 540, not chasing them. So if I catch a rally from here on up, I would treat it tactically. Or be patient and buy the debacle if and when it happens. That's basically what I'm saying with Costco. I would sell rallies. It's okay to trade short term. Long term, be open to the fact that the bears are in control and they could yank it down one tick at a time. Remember how PayPal bled? Yeah, this could happen here. You can be long, but be tactical about it. Like, for example, 510, super important. Campbell Soup, the anti-market. If you see it, it goes up when markets go down. It's pretty crazy. So if you're bullish markets, you don't want to be bullish Campbell Soup. And this is where it was 21. This is where it was March 20. Pandemic. Look, pandemic. Everything crashes. Campbell Soup goes bonkers. Have you ever known this? No? Yep. Welcome to the jungle. This is 2016. So, not a place for me to start Campbell Soup. In fact, I could short it. How? I would sell a call spread in it to buy a put spread, but I would do it long term. I may share it as an idea, but I definitely would not be long Campbell Soup. Let me see, 30 minutes. Okay, so you have a cluster of resistance up here. So here's what's going to happen. If this week the market has a tizzy, this might pop into there, I would look to short it. How? I would sell a call spread, buy put spread or a put, and short, question mark. I don't want to be too nasty about it. Something to do, tactical, balance, whatever, call it. If you lose this, it's going down to 47 or so. So CrowdStrike fell apart. This is a high growth company and high spend company, so still hated by Wall Street. Let's zoom out to see levels. Technically, they needed to hold this level. You can't say they did just because they closed above it. So they lost the neckline. They popped above it to see if they can hold it. So let's see what they do. If they get to 170, they come back to 150, hold it and get back to 170, I would trust it. Otherwise, it could be going to 100 or lower. Just because technicals are failing. I like it. It's a high growth company. But this is still the summer of the pandemic. This is the pandemic. So I would not catch this falling knife, assuming it's the bottom. Technical trade. Yes, I think there are a lot of sellers into 170, and you must hold 130.